Good afternoon, everyone. I hope you all enjoyed the Pink Floyd throwback there to get things started. I am Luke Tannen, Executive Director of Chicago Innovation. And on behalf of our co-founder, Tom Kuzmarski, and our whole Chicago Innovation team, I want to welcome you all to Cash is Still King. Now, some of you were with us 1 year ago for the first iteration of this event, and it goes without saying that we've all learned a lot since then. Now, one thing that has not changed is that money still tops the list of biggest needs for most organizations. And our financial landscape is undergoing big changes. So we're reconvening the experts to help us all become masters of our financial future. Now, if you have a question for the panel, please send it to us via the Zoom Q&A. We're going to spend the last 10 to 15 minutes or so addressing your questions. And we'll also invite you to join for a 15-minute networking session with your fellow attendees after the panel from 4 to 4:15. So we'll send a separate link for this later in everyone's Zoom chat. And before we get started, I want to thank our year-round Chicago Innovation sponsors, starting with our diamond sponsors, Wintrust, and with us here is founder and CEO Ed Waymer, as well as Accenture, Walgreens, and SMS Assist. I also want to recognize our gold sponsors, Comcast Business and Exelon. Silver sponsor, Vetter Price. Bronze sponsors, Energy BBDO, Crown Castle, LK, Thompson Coburn, Granger, Ramsey Innovations, Groupon, and Aero Digital Labs. And our media partners, Intersection, Clear Channel Outdoor, WBBM News Radio, NBC Chicago, and Crane Chicago Business, as well as one of our great in-kind sponsors, NASDAQ, who is part of today's event as well. Now, to get things started, to moderate today's discussion, we are lucky to have one of the absolute brightest minds when it comes to money. And it's my pleasure to introduce a nationally recognized expert on personal finance, the economy, and the markets. She's also the author of 4 best-selling books on finance, including The Savage Truth on Money, a must-read. And, of course, she's a Chicago Innovation Board member. So please welcome everyone to kick things off, Terry Savage.
Well, thank you, Luke, and welcome everyone. And my panelists can please unmute. I'm going to introduce you in a moment. I've just follow up on your great remarks, Luke. A year ago, nobody knew where there would be any money. I mean, PPP money was coming. Everybody bowed at Ed's feet because he said he would have the money. Today, it seems like there's tons of money around. I mean, look at the stock market. Okay, it was down 300 today, but a year ago it was 24,000. Now we're almost at 34,000. What's going on in the economy? Where do you get the money? How do you use it? I have a great group of panelists. I don't know what corner of your screen he's in, but the best Hollywood square is Ed Waymer, the founder and CEO of Wintrust Bank. He's, that's Chicago's bank. And Wintrust has over $45 billion in assets and 175 locations. It services innovative companies all over Chicago. And they were the ones that gave out the absolute most PPP money. Okay, Christy Ross, wave, Christy. Christy is the co-founder. This is the most fun I'm really going to ever have in an introduction. She's the co-founder, co-CEO, and president of Tasty Trade. Well, I'll let her explain what that is, which was sold for $1 billion, that's $1 billion earlier this year. But Christy's not new to making big deals. Before that, she was the CFO of Think or Swim Group, where she led its acquisition by TD Ameritrade. That wasn't such a big deal. It was only $750 million, $750 million. I can't wait to ask you a lot of questions like, what are you going to do without the money? And then Karen Kerr, wave your hand, Karen, are you there? Karen is a general partner at Exposition Ventures with over 25 years of experience as a VC fund leader. She's led venture activities for GE Ventures, Arch Venture Partners, and others. So she's the one that connects money, whether it's family offices or VCs at all different stages of the game, to people like you who are trying to raise money. So her insight is just going to be invaluable. And then the holy grail of success, I think it is anyway, Joe Brantuck is the Chief Client Officer for NASDAQ. He's the guy that really opens the doors for the world's most innovative companies to access capital markets, which, by the way, have been booming this year. He's been there 15 years at NASDAQ, thousands of IPOs, and you can be sure I'm going to ask him about SPACs as well. So with all that to get started, before we do this, I want to mention we're going to have some polls during our event today, and I think we should take the first poll now. So can we put that up? It has to do with how you're raising capital, or if you are or aren't. So it's just a quick poll. Is your organization actively raising capital or wishing you could be raising capital right now? Say yes or no, and we'll put the numbers up. And don't we have that great music? Dump, 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 dump. Can you click on your screen and take the poll? Everybody see it? And then Paul, you'll let me know when you've got the results. Wait, who isn't raising capital, right? I mean, Ray Kroc used to say, when you're green, you stop growing. Remember, I mean, you always got to be moving along. Do we have the results? Oh, yes. Oh, there are a lot of people that aren't. Okay, what, somebody chime in later when we do the audience Q&A, why you're not. And maybe your mouth will be watering after we get to the end of this poll. Okay. So Ed, let me start with you. You've got your finger on the pulse of the economy, and all kidding aside, you sent out a ton of PPP money over the last year. Could you just describe that program, how much went out, and what you think about it? I'm going to ask you more about the recipients, the small businesses that got it then.
Yeah, I think from a government program, might have been the most successful program they ever pulled off. Because they didn't try to bait and switch, or at least yet they haven't done it, but they still have time. But it really did a wonderful, between that and the leeway they gave banks on regulatory and accounting issues, really is what bought the time that got us through this. We, in round one, we raised 3.6, we gave $3.6 billion to approximately 19,000 customers. The average ticket size was $189,000, and median amount was $64,000. Just recently, PPP 2 or 3, as we call it, we did $1.4 billion, about 8,000 loans. Average ticket size $169,000, but the median is $48,000. We went out of our way in the last one we set up resource centers in low to moderate areas. So these companies who didn't have the expertise could come in and we could help them get it done. We had 16 resource centers throughout Chicago for low to moderate and minority owned and charities. And it was well received. We made it work really easy. Really proud of our staff. I mean, our staff was awesome through the whole thing because they realized they were actually helping people. And I think for the first time ever, people felt this was a program that just went seamlessly. We set up our program in a week and opened up that night, and we shut it down in 2 hours. We had like 6,000 applications already. In the first one, we decided to set up the second one same way because they had some changes, and I was really proud of our staff to be able to pull it off. The halo effect that came from that for Wintrust was awesome because big banks just didn't know their customers couldn't respond. We were able to respond well. Our people really liked it because they knew they were helping people. And yeah, I had so many people who would send me emails with saying, boy, so-and-so at 4 a.m, wrote me back and said, you got it. I mean, people were working all night to get it done. So I'm really proud of that. But I think it really did a great job in terms of avoiding an absolute disaster.
Did you get new customers out of that? I mean, some people who came to you were not previously Wintrust customers, I take it.
Oh yeah, the halo effect was huge. We had over 600. We concentrated on customers in low to moderate income areas and charities, and we had this group of our customer or potential customers who just couldn't get their bank to respond. We got over 600 middle market new businesses who are moving over to us. We moved about 50% of them over already. The other 50% are coming. It just was a wonderful thing for everybody, and certainly helped us with the fees to get through the process. But it really kept businesses afloat that wouldn't have been kept afloat before, and our people felt really good about that. As do I.
That's just an amazing accomplishment. I'm going to ask you to look forward in a minute, but I want to move on to Christy for a second. Okay. Did you really get $1 billion cash?
It's
I mean,
part
$1 billion?
cash, part stock.
Okay, wait, explain Tasty. First of all, explain Tasty Trade and then Thinkorswim, the previous venture, because some people just might have missed that story.
Yeah, absolutely. Well, so Tasty Trade is an online financial network where we produce 8 hours of live programming every day talking about the financial markets. We have a mission to make finance fun and actionable, teaching people like you and me how to trade. So just to give sort of the context around what we've built over the last 10 years, we have 7 companies within our company. So we have an ecosystem all focused on empowering the self-directed investor. At the top, though, is our network, Tasty Trade, and then we have a brokerage. Our main second company is our brokerage, Tasty Works. And so I love what we do. I just ooze passion around everything we do every day. But I'll share a little bit before I talk about sort of our exit. Prior to Tasty Trade, we had the same team that ran Thinkorswim, and we essentially went through 6 mergers and acquisitions in 6 years, and ultimately sold our company to TD Ameritrade. Again, we were focused on self-directed investors, online trading. And
this is way before Robinhood. This is like light years before. I remember going over to Thinkorswim, looking at that big wall. You focused on options. Tom Sosnoff, also your co-founder. So, I mean, you guys were geniuses, but I'm talking about in 2003 or 4 or 5, something like that.
So that was started in 1999 by Tom Sosnoff and Scott Sheridan. And then I joined as CFO and sort of helped them after they raised capital. And that's when we went through all those mergers and acquisitions and then finally sold it to TD Ameritrade in 2009. And then we jumped off. And that's when we started Tasty Trade. And so while we do a lot of the stuff that we did before, we're doing so much more. And Tom, my co-CEO, is an absolutely brilliant visionary. It's a great team. But anyway, so we're at that 10-year mark again. It wasn't like we said it's 10 years and it's time to sell. It basically happened. And I'm sure I'll talk about that a little bit today in terms of, what really led up to that. But we did end up selling the company. We're not closed yet. We had our first conversation in November. So had a letter of intent November 20th. And we signed our definitive agreement January 20th, made the big announcement the next day. And we're now waiting for regulatory approval. So we are sitting tight. So the check hasn't cleared yet, Terry.
Okay.
So we can't quite spend the money yet.
Okay. All right. Well, I hear all your questions out there. Wait, how did she find the buyer? Who was the buyer? How did they structure the deal? This is a pro. I will come back to that. But I want to move on to Karen. Now, not everybody, Karen, finds somebody willing to pay up $750 million or $1 billion just because you're so good and unique and creative, but there are people who need more money. I think of Ed talking about a median of $64,000 for the PPP loans. Did those PPP loans, Karen, take away the need for venture capital, or did that just keep companies afloat that could survive? And then now you're giving them money to grow. What is it that you see venture capital, especially in Chicago, an audience of Chicago innovators and entrepreneurs here? So what is it that the venture market looks like today?
The venture market in Chicago is absolutely on fire. I mean, last year, about $2.8 billion was invested in venture, which was a new high watermark. So venture investing has continued to blaze. I think at the beginning of the year, there was a little bit of a pause, and certainly as there was a pause, I think the speed of the PPP program, that helped certainly groups. But once investors figured out how they were going to continue to invest without actually having to go out and meet with companies in person, leveraging platforms like this, you really just saw venture in Chicago and really, quite frankly, nationally take off. So you saw some companies want to really raise a war chest because they didn't know what was going to happen. And so we certainly saw some of that. You saw companies like Tempest complete 2 rounds of financing last year for very large numbers. So the outlook in Chicago is pretty strong. You see And the early stage, there are quite a number of micro funds and accelerators that have gotten started. A very robust angel investing community here. And then for later stage companies, you're seeing some of the national later stage players come in. And now you're starting to see groups like Tiger come in with lots of venture capital at, kind of late stage high valuations. So it's a good time in the venture market.
I'm going to come back to you because I hear in my mind, I hear all of you out there going, well, wait, how do you get started? How do you come to your attention? I want you to give your tips for getting connected to venture capital. But first, look forward for a minute. Do you think this whole virtual thing will continue? I mean, not that it's going to do away with the luncheons and the meetings and the, Chicago Club kind of thing, but do you think that this acceleration to virtual is going to continue, and will it help make connections going forward?
I think it will continue. I think we're still going to have, in-person meetings as well. But, a lot of venture capitalists spend a lot of time traveling and flying to meetings, and companies really spend time traveling out to the Bay Area to go raise money. And Chicago companies just traveling to the Bay Area to raise money. I think it's made it much easier for them to access pools of capital on the coast.
Okay, I want to come back to you and find out more about, let you give some tips to all the people out there. But then I want to go on to Joe. Tell me those incredible numbers about the IPOs of NASDAQ in a typical year and so far this year. I mean, we are in a pandemic still. I mean, we're still, what's going on? Those numbers are shocking.
I continue to pinch myself. And so just for the audience here, so on NASDAQ alone, year to date, 2021, we've done 296 IPOs so far this year. Just to put that in perspective, so last year to date, so through April of 2020, we had done 27. So in a normal year, overall on NASDAQ, we generally are quite happy if we reached 165 to 175 IPOs on NASDAQ, for the entire year. So clearly just an incredible run so far this year. And now here's the catch. 200 of them are SPACs. So certainly, Terry, we could talk about SPACs and the impact on that. But yeah, so year to date, we welcomed 203 SPACs on NASDAQ. And if you take a look at just the capital, sticking with the theme of this conversation here, $90 billion of proceeds has been raised this year just on through the SPAC market.
Give us people have heard the word SPAC a lot. I followed it a lot, but give us the scenario, the timeline. A SPAC raises the money and then makes an acquisition. It goes public with just cash, basically, right? I mean, tell how is that easier for them to get a listing on NASDAQ if they don't have any, or they only have cash?
Yeah, so it's interesting. Maybe back up a second, just for folks. SPAC, Special Purpose Acquisition Company, and essentially what it is a vehicle to raise money through an initial public offering of taking the SPAC, public, either on NASDAQ or the New York Stock Exchange. The asset that goes public is just really represented by a couple of individuals that have demonstrated to the investment community that they have a know-how, skill set to find quality companies. And once they find the company, and so Terry, you mentioned about the time frame, they have 2 years from the day of the IPO of the SPAC to take those proceeds that they raised in the initial IPO, acquire a company, and through a very short process, essentially what happens is the SPAC becomes delisted and the acquisition company becomes the listing entity to continue trading on the exchange. So what this has done is really brought optionality to companies that are considering potentially going public, where it used to be just the traditional IPO, where you hire bankers, you write an S1, go through a 2-week non-deal or 2-week roadshow, try and sell the deal. You make the allocation, you raise capital that way. So certainly an alternative to that traditional process.
So innovative companies like the ones in our audience that are thinking, what's the either a buyout, think you come along with $1 billion, but to go public, they used to court the investment bankers who, we had a whip hand on them. Well, maybe we'll do your deal, but we need these warrants and we need these, this and that. We make a lot of money as investment bankers. Now is the recipe for going public. It's like 95% of the IPOs this year have been kind of these SPACs on NASDAQ. Is it, I've got to hunt around and find a SPAC that has raised money and is just looking around blindly for a good little company like mine? Where's the chicken and the egg in that process?
Yeah, it's exactly right. It's an interesting one, right? So the SPAC, they have an obligation to deploy that capital and find an acquisition. Otherwise, they have to return the initial proceeds to the investors. So, I think this story has yet to be written. The full story has yet to be written. In that, right now, there's only been 26 business combinations year to date. So if you think about it, right, there's over 300 SPACs that have gone public so far, but only 26 actual business combinations. So there's an incredible amount of capital out there chasing, and folks are wondering, is there enough great quality companies to acquire?
I see 12 people raising their hands saying, "Oh, how do I?" And I'm going to ask you that. And then I'm going to ask Karen that, and then I'm going to ask Ed, if all bankers are not useless now. But first, how if there's all these companies running, there's all these. Don't say that. I married one once, Ed. That's useless. Okay. There are all these companies, these SPACs that are flush with money. They've got to spend it. They've got to find a company. Do you know? And then I'm going to go to Karen. How they find the companies they want to buy?
Yeah, so it's through networking, it's through the banking channels, it's through industry and consultants. So that's their challenging, and they're leveraging all different resources to try and find those companies. Now, when you think about the universe of SPACs, in their initial S1, they do acknowledge what type of investment and what type of target they're going after. So if you're a company, certainly you could start doing some pretty basic searching and say, okay, here are the folks that we want to try and get in front of.
Now, Karen, is this going to destroy the venture capital business, or I was going to say replace a good part of it? Because there's a pool of money and all you need is a connection.
I think one of the challenges maybe on the venture side is, companies have been staying private longer. So getting to an exit has, so if you're an LP, a limited partner in a venture fund, you're seeing wonderful appreciation on paper, but you haven't necessarily seen the dollars return to you, and cash is still king, and the limited partners want their cash back. So these SPACs have been around for a long time. They were usually considered a terrible way to go public for broken companies, right? And I think what you're seeing now, particularly with, there's been a lot of noise in the venture capital community about companies leaving cash on the table with your traditional IPO, from the fees, the underpricing, and then the big pop afterwards. So I think SPACs are here to stay as part of the armamentarium, but we've certainly seen a number of companies who are, I would say, still kind of development stage go public through the SPAC vehicle. I think it's an important. Are you introducing
any companies that where you've put venture capital in? Are you being a matchmaker with any existing SPACs?
Pretty much everybody who's got us. I have definitely heard from SPAC CEOs and directors looking for acquisition targets. A couple of my portfolio companies from my GE Ventures portfolio have gone public in a SPAC last year, and many others are being.
All right, so let's ask the banker. Ed, last year the problem was there wasn't enough money around, and we know how much money's been put out there in various ways. It seems like there's a lot of money floating around now, looking for a good investment return on acquisition, a deal which should make everybody in our audience go, okay, just give me a roadmap. But what's your view of that aspect of the economy right now with money chasing deals?
Oh boy, I see SPACs as a direct competitor to the private equity business. And because they get paid almost like PE guys, the guys who run it, they get a carry and override. I think it's just going to lead to irrational pricing again, which will in turn kind of shut down the banks. And this exuberance that I think we're going to come roaring out of this this current dilemma. And banks will still give money, but not have to over leverage to start out. So we never had an investment bank. We have a little venture arm that does pretty well, but I think the economy, as I said, is going to come roaring out of this. And everybody's going to feel really good about themselves till they don't. There's so much cash out there right now. Let me just look at this. Consumer net worth is up 20% year over year.
I'm sorry, what is up 20%?
Consumer net worth is up 20%
Okay.
year over year. Fed's balance sheet is up there. There's a lot of cash out there, I'm telling you. And the projection has the national debt going to 2 times GDP. It's going to be cash out there for everybody, which is going to lead to inflation. It's like the 70s all over again. I feel like I should have my disco records, my bell bottoms on, ready to rock. But these are interesting times. I think inflation is going to take over sooner than anybody wants it to. Got the government again saying, well, let's think about this. We won't include food or energy. Well, food, energy, booze, and golf balls, that's my life, and they're all going up. So I really think that the government's trying to hoodwink everybody by all this cash coming out. You're going to pay the price sometime, which means as bankers, we have to be very, very careful in how we deal. You don't want to be out and over leverage, and bankers notoriously follow the herd. Now we don't. Remember back in 06, before the 08, we went into rope-a-dope and waited and came out cleaned up when it hit the fan. I caught a lot of grief for that. They called me Chicken Little, all sorts of things. But we won't be afraid to do it again if we see it happening. Right now, the markets are pretty good. The cash is there. There's a lot of cash, as you say, in the market, really looking for a home, which is going to drive things up like crazy. And you got to be real careful.
So if you had a nephew or a niece, let's make it, that was in our audience, and they had a small business, and it's really a good business. I mean, they're actually almost profitable right now, and they've got great forecasts for the future. They've got a really innovative product or service, and some good people have advised them that they're going to be very successful. Would you tell them right now to take advantage of this moment and let us back take them over? What if you were at the stage where you never would have dreamed quite that you were ready to go public, but there are these SPACs out there? Or would you say, no, you're better off sticking with traditional venture capital? There'll be more hands-on advice. What kind of advice would you give to a small company, Ed?
Well, to be a small company, be involved in a SPAC going public doesn't make sense. You got to be at least mid-sized to do it.
Right.
Well, I'm a serial builder. I was told once by a man, he said, Ed, everybody's saying when we started Wintrust 30 years ago now, but 5-6 years in, so he said, you just build this to sell. And this guy said, Ed, anybody can sell, not everybody can build. Building is fun. I'd say, what are you going to do after you sell? Can't all be like Christy here and do it again and again. But I guess you can, but you never know. But I think it's fun to build. I would tell somebody, make sure that you know what you're getting into. If you've started that company, it's your passion, it's your life, it's everything about you. And it's hard to sell. It's like selling a baby, I mean, it's fun to build. And I think, we built almost a $50 billion bank in 30 years and about 35 billion under assets under management. And we're still having fun. You can build it your own way, do the things you want to do. Getting involved, I wish that banking wasn't as capital intensive as it was, because quite honest, I'd rather have a dead rat in my mouth to be public again. Going public is a pain in the neck. Trust me. It sounds like, oh, I'm going to get all this money and do all this stuff. It's an absolute pain. I would tell them to think about it. There's plenty of capital out there, either venture or otherwise, and just traditional bank financing is available. stick with your passion, make it happen before you sell out. That's what I tell them, but
Okay, that's it. That's, I mean, where else can you get this one-on-one advice from experts? And I'm going to talk to you, Christy. You know, we could say, I mean, it would have been an easy conclusion for me to jump to. See, there's tons of cash around. You got $1 billion, but you did this really a decade ago when there wasn't really tons of cash around, and you got almost $1 billion then. So, I don't know where to go with this. I want to ask you really how you made this match with the sale, but I also want to ask you, what's your big picture of where we are in the economy in terms of raising capital and businesses finding financing that's serious and allows them to grow?
Yeah, boy, there's so much. And if I can first comment on a couple of things
Sure.
that these guys have said, just because Ed hit on something like near and dear to me, and if you don't mind me sharing this.
No,
story.
go right ahead. That's the point.
Yeah. So, you know, running a public company is not exactly like a bed of roses. You as an entrepreneur, as a founder, as a, you know, CEO, whatever, it's fun building a company. You have your passion that you are throwing into this every single day. When you have to run a public company, your whole job description changes. You are now focused on governance and reporting to public investors, where you have to worry about your quarterly, you know, report card, if you will. It's a totally different scenario. And I'll be really honest with you guys. We had 3 LOIs from 3 different SPACs on the table. And we were talking through, do we really want to do that again? And we were looking at 2 other strategic partners when this other conversation, I'm going to say, sort of dropped in our lap. It didn't exactly drop in our lap, because we are always open to having conversations. And, you know, we are always willing to listen and look at deals because you learn so much, and you build that foundation, that framework for future capital raises, future M&A, you know, all of that. And I could go on and on about networking and how important it is to take the call, no matter if it is from an investment banker that just wants to learn about you in those year 2. You find out later that 6 years later, they might have an amazing deal for you. You know, it's things like that. Anyway, but we're saying we did look at SPACs. I'll be honest, it sounds like, it feels like the .com boom all over again. And boy, we're all waiting for that bubble to burst, right? And it's a little bit scary, because we've seen it. All of these new entrepreneurs haven't gone through that, haven't seen what a market crash looks like. So anyway, so I digress.
No, good warning. Good warning.
Yeah. So when you look at the economy, though, if I can talk about the economy as you're just to answer your question, you know, the economy is going to take some time to recover when you really look at it. I think, you know, when we look at recovery, it's going to be by different industry sets, right? And we look at, you know, unemployment rates, and that's sort of one of our measures and indicators of how the economy is doing. Prior to the pandemic, it was like 3.5%. A year ago, you know, a year ago today, it was closer to like 15%. And then now we're seeing it come back down to about 6.2. But if we talk about these pockets of industries like hospitality, hit over 39% unemployment, and that's now down to like 13%. But so it affects, you know, industries differently. And so we were lucky enough to be one of the industries that saw more activity as a result of the pandemic, with self-directed investing and trading. Yeah. And we were, again, fortunate enough to be poised as a digital first company, online content, online trading, but not all financial services firms, you know, were. And there was sort of this huge, you know, shift even in financial services, particularly the larger institutions like Ed was talking about. He was able to like sort of flip on a dime and do PPP. Well, a number of these other large institutions actually had digital transformation like on their list to do, right? And didn't really you know, didn't really have that as a top priority. So when we talk about like sort of returning to normal, that like the digital transformation is not going to go backwards in financial services, right? I mean, Yeah. And so when you look at a lot of these companies now, I actually look at this next, call it state of change that we are all going to go through in coming out of the pandemic. You know, I think change means opportunity, and that's where we're going to see some of the most innovative ideas come to life, just like we did when we were, you know, diving into the pandemic, right? And everybody's going in lockdown. You saw like an incredible amount of innovation. I think we're going to see that same thing again as we come out of the pandemic. So I think the VC firms have done an incredible job of adjusting to their mindset. You know, normally it's, I need to see them, I need to meet them, I need to kick the tires. Yeah. They've actually done an amazing job digitally to meet the entrepreneurs and still provide the funding. So that's a major kudos to all investors across the board.
Joe, let me ask you a quick question and one more for Karen, and then I'm going to take, are you posting your questions on, and I guess Paul's getting them and he'll have them ready in a minute or two. But let me ask you, is the NASDAQ worried about, you know, we just talked about .com bubble. Someone earlier today said to me, tulip bulbs, you know, about some stuff. Is the NASDAQ worried about what would happen, by the way, if all these firms had to, or a significant number of them couldn't find investments, couldn't close deals, and therefore might have to give the money back? I mean, are you making contingency plans for all the doomsayers, for whatever reason the doomsayers are about the market?
Yeah, I would say that we're are we worried? We're not worried. Listen, we've all been through you know, multiple cycles before, right? So I think there's a sense of pragmatism to everything that we see here. Like I said, I think for the short term, you know, SPACs here, again, this is going to be a, you know, a 2-year program, right, to see how well this capital can be deployed. But where we see a critical role in the capital creation process is really going back to our ethos and our core, which is really about providing transparency in a highly regulated market, right? So as you're seeing more and more SPACs come out, you're also seeing more and more articles in the Journal and others about the SEC starting to look around and investigate, you know, this process and this alternative to be going public. So I think we will, and we have always been a proponent of transparency, you know, leveraging technology to bring greater transparency to the capital markets, and we'll continue to you know, support that and support you know, the SEC as they evolve the new sort of layer of regulation against, you know, what has been relatively you know, a newer phenomena here, which is, you know, these pure numbers.
The new SEC chairman has said he's got his eye on SPACs and on crypto and a bunch of things like that. I said I would come back to you, Karen, because this is the thing that everybody's saying. Get back to Karen. Will you give us your 3 top tips for a company in our audience to connect with venture that is not only just money, but helpful to the company? Maybe I'm making a wrong assumption, and you guys put it up in your questions, because we'll do that after Karen does this, but 3 top ways. I mean, we're going to put up your phone number, of course, your cell phone, Karen. But but how do the people in our audience, okay, they're not ready for a SPAC, but they want some money and some help. Half of them said they don't even need any money. That's a sign of the times. But what were the tips? Yeah.
You know, I think the first thing I would say is capital. We were just talking about how much capital is out there. It's kind of a commodity. So when you're looking to fundraise, you should want to choose your partners wisely. So that's the first thing I would say. And different venture capital groups or angel groups or private equity groups will invest in different sectors, will invest at different stages. So it's really important that you be targeted, that you understand what an investor is looking for, and that'll help you maybe close.
Well, Karen, is there a directory out there called, if you are a small tech company in the Midwest, press 1. If you are a consumer products company that needs manufacturing because you've got a big order, press 2 and be connected with these particular venture capitalists? I mean, how do you do that?
Venture is the ultimate networking game, but I will say this: if you are in the manufacturing space, and that's the space that I happen to cover, you've got a brand new accelerator at MHub focused on IIoT. They'll be doing another one on medtech and one on energy. You've got groups like, so I'm very excited about the capital that's being formed locally, a whole host of micro funds, and they're popping up so quickly. It's probably not a great directory, but I'm sure that the folks at Chicago Innovation, World Business Chicago, the Polsky Center, those are excellent organizations to get involved with, and to get involved with for some mentoring as well.
I love it. That's very practical advice. We have another poll speaking about where you get financial advice. This is perfect time to put it up, and then we'll take your questions. Paul, can you put that up? And the question is really, where do you turn for financial advice? And click on all of them that might apply. You see the choices up there, whether they're personal advisors or close family friends. Let's take that poll right now. Give our panelists.
Hey, where's your lovely
there? I want all my advice from Christy.
What'd you say?
Where's your neighborhood bank in this? For God's sakes?
I didn't see that. You're okay. We should add a category, but you're going to get the last word. Eddie's clicking. What'd you click on?
I closed it. There's no.
All right, here we go. Personal advisors, financial publications. Do you read my column? Podcasts, close friends and family, and others. Okay, let us know in chat. Oh, well, that's okay. They'll probably say your bank. All right, I'm going to close that myself. Now, Paul, this is the way we're going to handle this for a few minutes. Paul, you want to put up the questions that you think have impact, and we'll direct them to whoever's on the panel. Have we got a question? Have we got you in there, Paul?
Yeah, so we got a few that came in, Terry. So the first one, this is from Pierre Cooper, and he wants to know, what do you see as the #1 industry to invest in 2021?
We have to ask, we didn't know whether Pierre wanted to know a public sector or a venture capital type investment, but Karen, I'll start with you. Do you see greater possibilities in any particular sector?
Well, my fund is actually focused on digital transformation and specifically of industrial companies. And I think those so I'm excited about technologies in that space.
Ed, what clients of a bank do you have a venture arm. So do you avoid tech, seek tech? Is there any other area that's piqued your interest?
Well, anything with tech is obviously important. I'm a fan of the high touch, high tech approach that's got. I go back to looking at, remember the movie, what was it? Hello, Dolly? Where the guy owned the hardware store. He said, you want to be rich? Sell people something they need every week. I'll be really rich, sell them something they need every day. So you really have to look, there's so many things out there that to try to narrow it down, you have to look at what they're selling, what the end focus is, and what the need's going to be going forward. That's what I think.
Okay. Anything happening, a trend that you see, Joe, on the NASDAQ? Is there, we trended away from, I've got one for you, Christy. I was going to save it for the end, but I'm coming to you next because I've wanted to ask this since we got on. But is there any trend, Joe, that you see like among even the SPACs, as they say, that they're focused on a particular area?
Yeah, no, I mean, I think they're pretty well distributed. But I would say, just to go back to the question in terms of, what we're seeing in terms of a trend, we're definitely seeing a trend in terms of getting away from stock picking to more, index investing. So we're certainly seeing a lot more index and thematic investing versus, stock selecting. So that would be something that we are observing every single day. And, as an employee of NASDAQ, which we have lots of restrictions in what we can and cannot own, I love the NASDAQ 100. I buy a lot of it. So there's my endorsement for the NASDAQ 100.
Christy, I've been wanting to ask you this. I mean, that was my very first question. If we were out having a glass of wine, it would be what I would ask you. So my question is, it's a two-parter. Are you thinking you're going to do this again? Take this magic formula and go build another one, or or are you thinking, well, gee, you know, when the check cashes clears, I'm going to have some money and I've learned so much. Are you going to be a venture investor? And if so, where would you be investing? As
Yeah,
a
no,
venturist?
okay, so I'm an investor today in angel investor. I invest in funds and just do that, you know, personally behind all the scenes. But it's and one area in particular that I, of course, am interested in, and just because, you know, it's not just because I'm in this field, but I think that when even like Karen mentions, you know, digital transformation in fintech, I'm sorry, financial services, and Terry, you've been in and around financial services for a long time too. This is just, we are in this amazing state of transformation. And I have seen so many companies with great ideas really like moving the needle. So that is one area when I, you know, fintech in general, for sure. I mean, here you see Amazon, you know, going to launch a bank. Ed, I don't know if that's worrying you or not, but you got some of these companies that, you know, it's not just for financial institutions anymore. You have a whole other world. So that's my area that I definitely would look at. But to answer your first question, you know, could it be done again? Absolutely. Other than my non-compete that we're not going to be able to do the exact same thing. But I think, you know, the older I get, the more important, you know, doing something that you love is. So that wonderful phrase, do what you love what you do, because you spend a majority of your time doing it. If we are having fun building great companies, you know, that's what life is about. You're in it to, you know, make a difference. You're in it to hopefully affect people's lives. And it's really more about part of it's more about the journey than the end game. Listen, $1 billion, I'll take it any day, but it's really about the journey. And I don't know if that's the Midwest mentality or what, but you know,
it looks good on you, Christy. It looks real good on you.
Oh,
and Ed, Christy asked a great question. Are you worried about Amazon Bank?
No, it's just not a big bank. I mean, our approach is, so we're the consortium of community banks, high tech, high touch. We give everything they need electronically. We won, what, 7 or 8 Greenwich Awards last year for our electronics, but we also are the high touch, which came through in the PPP. We could talk to people and get it done. I don't think money is a commodity. I think that it is a commodity, but it's not a loaf of bread where you go get a Jewel or anyplace else. We found that from 0 to like 22 years old, we had #1 market share, pretty much all the towns we're in. And then from 30 on, we got it again. In that middle space, we didn't have it. All the boomers or whatever you want, Jenna, through the years, I can't even name them all. But when they needed something, they needed some help, they came back to somebody who could help them and knew them. They could still do all their banking one way or another. You know, they could do it online. They could do, we have the same better products, same better delivery systems. We kill them with service. It's nice to be able to call in, Lake Forest Bank, go in, I need X, Y, and Z. Sure, I got it done. As opposed to calling an 800 number, find somebody who doesn't know you. That's our secret sauce, is combining both high tech and high touch. With branches we build now, we could flip over to be like Capital One if we wanted, serve coffee and rolls and, you know, money or whatever. But that's not, I think that money's more important than that. And people want a trusted advisor, as indicated by that poll. People still looking for a trusted advisor. That's what we want to be. So what's one more big bank? We're a consortium of community banks. We run differently. There are multiple charters and multiple brands. But we walk the walk. We don't just talk about it. We actually walk the walk. And that's why we're growing so fast, is people finally, especially in the Midwest, they understand they want to deal with people and when they need them. And that's why so from 30 years on, when somebody needed something, they knew who to call. I'll call in. Boom, they get it done right away. When all they needed was, you know, an ATM card and a debit card, they didn't need anybody except ATMs. Now, as they get older, they need more. So as we get more locations with our free ATMs for everybody, we're actually gaining a lot of share in that middle age, but I'm not that worried about it. I think our approach is hybrid enough that it's going to survive. You want high tech, we give it to you. You want high touch, got that too.
You got something for everyone. And maybe that's just the secret. You know, I mean, you guys right under the cover of everybody, blown away, Christy, the big, the financial services company, really seriously, the Schwabs and the Fidelities in a way, you just got right to the people, gave them access and are handsomely rewarded for that. Paul, do we have got time for one or two more questions?
Yes, for sure. So there's a couple more here. First, Gwendolyn would like to know, how much of your personal money should you invest to show an investor that you are personally committed?
Ooh, great question. Karen?
It's a good question. And, I'll say from the point of view of somebody who is a venture capital fund leader, the limited partners are certainly looking for me to put a substantial part of my own net worth in the funds. And so, I think it's going to vary depending upon the individual. But if you've got substantial net worth, investors are certainly want to see that you put some of it to work.
Okay, but what if you don't? What if you your life is in the company and you've worked for it without taking money out particularly, but you don't have a lot of money to put in, otherwise you wouldn't need the venture, right? I mean, what do you say to that?
That's right, and that's why I think it depends. If you don't have a lot of net worth, but you're working full time on the company, and maybe you're taking less than you would in a corporate job, that's an investment.
Yeah.
Right?
Okay. All right, Paul. Another question.
Not
Yeah,
many of
we
those,
got-
Terry, have
What?
most of these guys get founders shares, so
Yeah.
they're in it with their founders shares, which usually is a lot of money, and they pay a lot for it, but that shows a commitment there, and you're going to have their interest.
Okay. Paul, what else have you got for us?
So we got a couple on crypto, so I have to ask one of these. Paul
Oh,
wants to
great.
know,
Okay.
what about cryptocurrency? Is it the next multi-trillion-dollar opportunity? How do you finance, invest with crypto?
Toss up. Jeopardy, double Jeopardy round. Anybody got a comment?
All I'll say is we just started offering crypto on the Tastyworks platform in February, and it has really taken off. But in terms of like actually investing in a company, that is, like that one I would have to leave to Karen or Joe here.
It's happening, folks. I'm on the board of CME Group, and we have futures contracts in current cryptos. Boy, it's the Wild West in some ways, and in some ways it's being legitimized by global central banks. So it's really hard to say one thing about crypto. I mean, the need for it, the usefulness of it is apparent to all. It's just so much more. Look, when I started reporting, so it shows you how long ago it was, they had helicopters landing on the bank at the Federal Reserve Bank on LaSalle Street, delivering checks. And you couldn't get your money for 2 days if it was a Chicago bank, because they didn't have the paper moved, and a week for an out-of-town bank to clear the funds.
The good old days. The
You
good old
remember
days
that,
afloat,
Ed? Yeah. I mean, so crypto, doesn't that make perfect sense to you? You think you'll ever be banked?
It's tulips in Holland, Terry.
That's
Next, when one of them goes under, you're going to see them all crash, and it's going to happen. And I just, without the full faith and credit of the government behind it or anybody behind it, doesn't make sense to me.
Wait, I'm going to just engage you for 1 minute. The full faith and credit of the U.S. government is behind printing money at a deficit rate of $2 to $3 billion last year and $2+ billion this year. So, I mean, I don't mean to be disrespectful to the full faith and credit of the U.S. government, but wouldn't a crypto immediate exchange digitally, which wipes out tons of costs between central banks of the world, if they agreed on it, wouldn't that make sense to you as a banker if it was agreed upon by some kind of standard like that?
Nope. Still tulips in Holland. You get your money right now. You get your money right. You get it through Zelle. You get it anywhere you want it.
Right.
I don't understand the need for it. I mean, I could email you money today. You'd have it in 3 seconds through Zelle or what have you.
Yeah.
The payment now they're coming up with the new payment processing that will take wires out of the equation. I'd rather have something behind it other than, the whims of the world and the market. That's to me, it's just a big gambling game. I don't know how it fits.
Okay.
Other than maybe you lose the country exposure risk between it.
The
then your
current
hedges are gonna
exchange
go in
rate,
that sort of
yeah,
thing. So,
okay. Joe, I mean, they're all coming home to roost on your platform. What do you think?
Yeah, I mean, the only thing I would say to this is, there was a validation last week. So we had Coinbase do the direct listing on NASDAQ. So it is the largest direct listing in history in the world. So, they had a reference price at $250. They obviously, a lot of retail interest. It went as high as 380. I think it's trading, it's around 320 today with a $60-70 billion market capitalization. Now, keep in mind the NASDAQ, we are publicly traded ourselves, right? We have real revenue, we have real everything, and we have a market capitalization of 26 billion. So it is pretty remarkable that if you take the market capitalization of the New York Stock Exchange and NASDAQ and put them together, Coinbase actually has a larger market cap than the two major exchanges here. So there is something to be said about that.
There's something to be said, and let Ed say they have the last word. That word starts with a T, tulips.
Tulips in Holland.
Tulips in Holland. All right. Look, we started talking. This is amazing. Let me just wrap it up and then turn it over to Luke. But look, a year ago, this is really an astounding get together. A year ago, people were businesses, everything's shutting down. Where will we get the money? How will we even survive? A year later, thanks to you, Ed, and particularly in the Chicago area, businesses have survived. The economy is turning around. None of us should leave this room thinking that problem is completely solved, because we know that there are millions of people who are, when things loosen up, going to be evicted from their apartments, going to be losing their homes, if the mortgage, they're going to be not being able to pay their student loans. There's still plenty of ordinary people who are not getting their jobs back in hotels, or in restaurants and so forth. So it's not like happy days are here again exactly, but for the purpose of entrepreneurs and innovators, we have survived the worst of the business crisis, and we're sitting here talking in billions. And to add, billions are what he hands out. They're also tulips, okay?
Yeah.
And Karen is the billions is the connections. And for you, Joe, billions is the market cap of innovative companies, whether through SPACs or any other way, on the NASDAQ. And for Christy, billions is, when is that check going to clear? So you're buying lunch next time, Christy, okay?
You got it.
Thank you all, our audience. I have never had more fun moderating a panel ever, and I'm going to turn it back over to Luke. Thank you.
Thank you, Terry, for that.
Thank you, Terry. And Terry, billions for you is the amount of people that should be reading your blog on a daily basis.
Thank you.
I know we've been talking for an hour. I feel like we were just getting started. This was a fantastic discussion. Terry, great job leading the whole thing. Ed, Christy, Karen, and Joe, outstanding panel. Thank you for sharing great insights, advice, stories with our community, and really for everything that you do on a daily level to help innovators make their dreams become realities. And I think that's really what is so meaningful and impressive about this group of 5 people here. So, okay, up next, for those of you in the audience who would like to chat with some of your fellow innovation-minded leaders in Chicago, we invite you to stick around for 15 minutes of networking, which will take place in a separate Zoom meeting. You'll find that networking link in the chat. Great, we just posted it. And after you click that link, you'll be directed to a separate Zoom meeting. Once you click it, give us, a couple meetings to shuttle everyone over and launch the breakout rooms. And each room will be around 6 people or so. We'll include some instructions in your chat window to help guide the discussion. We were thinking in your groups, obviously, everyone introduced themselves to each other, but we also wanted to propose the following prompt, which is, what is the most important financial lesson that you each have learned over the past year as it relates to your business? Because with the world being upside down, I think there's so much that we can all learn from each other. And for all of you unable to join the networking, I want to thank you again for tuning in today, and we hope to see you at our next event.